Welcome back. You're still tuned into Midcap Radar. Well, Indo Count is the stock on our radar today. The company has recently acquired US premium national brand Wamsutta. We have Kailash Lalpuria, the Executive Director and CEO of the company, joining us now to discuss this and talk about the synergies with this particular acquisition as well. Mr. Lalpuria, thank you so much for joining us today. Well, I wanted to understand what are the benefits of this acquisition, what made you go ahead and acquire it, so how would it add to your revenues, your capacities and total addressable market as well?
So we are quite excited by acquiring this brand, which is a national brand. So as a company, we have elevated to the premium and brand segment. What we sell, we have a complete product basket, selling, not only sheet sets as a commodity, but also fashion bedding, utility and institutional bedding. So we would leverage all these products and the complete basket, omni-channel and globally as well. Being a national brand in the US, North American market, we can sell well to surrounding NAFTA countries like Mexico and Canada as well. So what we see is the expansion of markets, expansion of customer base, expansion of product base, because our core competence is bed linen production, but we can extend it to the outsourcing model as like many other brands do. So by adding this brand to our portfolio, we will be also looking very strongly to the Indian market, because we have a lot of Indian aspiring consumer as well. So we see a good growth in the coming years in the branded segment, and this will help us, achieve new milestones.
Mr. Lalpuria, couple of questions. Number one, how did you arrive at the valuation that you decided to pay for the entity? We believe it's close to 85 crores that you paid for the entity. What has been the revenue profile of the company over the last couple of years, and how will it add to your revenue mix as far as FY25 is concerned? You did mention that the margin profile there is slightly higher than what you currently enjoy. So can you give us a sense of that as well?
Certainly. See, we have been growing steadily at a CAGR of almost 12% for the last 5 years. We reported in FY23 a revenue of 3,000 crore plus. We have given a guidance to have a revenue growth of almost 15 to 20% and a volume growth of almost 20% this year. We have also given a margin profile guidance of 16 to 18%, which is better than last year. Going forward, what we are strategizing is to add on certain brands and licensed brand as well. This we have acquired from Beyond INC, as this brand was doing very well at Bed Bath & Beyond. The last year revenue till the defunct Bed Bath Beyond went out of the business, they were doing a revenue of almost 500 million plus. So it is a national brand. It is a specialty and departmental store brand. So it will give us a leverage to see that we upgrade ourselves to the premium and branded segment in the US. It will open doors to both B2C and D2C strategies as well. It will help us also sell online very well, and plus enjoy also the domestic market in India with this kind of brand profile. We can also extend this to various other products, as I mentioned, because it's a home fashion product. It's not only a home textile product. We are into soft furnishing. So
Mr. Lalpuria, yes, we do get that point. But the thing is, we would like to see some numbers as well. You said it's $500 million in terms of annual revenues, the acquisition that you've made?
Yes, this brand was doing around 500 million across all categories at Bed Bath & Beyond when Bed Bath & Beyond last year went out of the business, and at peak it did even 800 million. So this brand has been existing there for the last more than 178 years. So you can imagine that it has seen all kinds of disruptions, all kinds of growth.
No, while I get it, it's just a big number. So I was just wondering, how did you get it for 80 crore rupees, right? Like, it's around 4,000 crore rupees in Indian terms, if you look at the revenues, and you're saying it's a premium margin profile. So that's the reason my colleague also asked, what is the basis of the valuations that you got it at? This 80 crore rupees, is it an all-cash deal? How will you be paying that as well?
first of all, we are paying through our internal accruals of the parent company. So we are not raising any kind of debt. Secondly, we were already a customer to Beyond INC, and they saw that we have operational capabilities to justify that we can explore many areas to promote this brand across the globe. Their strength was not that they can promote this across the globe. Their strength was only the US and online businesses. So we can go to the retail with the set of customers which we have, with the kind of presence we have, being the market leader, having the necessary operational capabilities. They saw a competitive edge in us as a partner to see that how we can leverage our strength to take this brand to new heights. And that therefore we negotiated with them a good deal, and we got this deal in 85 crores.
Okay, so you are saying that at its peak, the company in the past has managed to actually garner revenues of close to $500 million during the peak time, but now you've got it at a very good valuation of just around 85 crores. So that's very good to hear that. FY25, what is the internal target you set in order to go ahead and turn around operations of that particular brand? What do you expect to add from that brand in terms of top line, if you could give us a sense?
We certainly are. We have an ambitious plan for this brand going forward, and we intend to have almost a revenue of more than 100 million plus in the next 2 to 3 years. FY25 will be better off giving you numbers post our Q4 results. So we'll properly provide you the numbers both on the volume and the value, what we intend to do with this brand and our company's revenue. But we see a big uptick using this brand to reach the core Wamsutta customers across the globe and see that we get those kind of revenue and margin profile going forward.
Mr. Lalpuria, so two-part question. First, are you taking any debt from this acquisition? Is there any debt in the books of that particular brand that will be merged with your company when it is acquired completely? Second, when you say premium margins, what is the margin that this particular brand was enjoying so far?
Now, first of all, we are not taking any debt on the books because we are buying an IP. Secondly...
No, is there any debt on the books of Wamsutta that you will be, not for buying the company, but is there any, in the enterprise value, is there any debt that they have?
No, they don't have any debt. So we bought an IP, so we didn't buy the company or any kind of asset.
Okay.
We just bought the IP. So that's what we did. And since this is an e-commerce entity, they have various brands. They have even taken up Bed Bath & Beyond, Beyond INC, then Bye Bye Baby and all different IPs when Bed Bath & Beyond liquidated. So they took all these IPs and we got this opportunity being a customer to them. So they felt justified that they should pass on this legacy to us. So we are better off with the brand. Now,
that explains the valuation, yes. Now that explains how come you arrived at the 85 crore mark. But my colleague has a question.
Thanks so much. So that clarifies quite a bit for us. Now, we just want a little bit of sense in terms of actual business operations. Q3 was slightly muted, number one, both in terms of volumes. But in the con call, you did manage to hold on to the guidance. And even now, you've given the same guidance. So shall we hold on to the fact that you expect volumes to grow close to 20% for FY24? And secondly, how did cotton prices, behave in Q4? Q3, you did gain a little bit in terms of margin expansion on the back of slightly lower cotton prices.
As I mentioned, Vivek, I'll be better off to give you guidance, on my Q4 call. Certainly, but we have an ambitious plan. We have strategized long back, 3-4 years back, venturing into B2C and D2C strategies. We have now almost 7 verticals for the company to diversify our business. It's not only selling commodity sheet sets, but we have fashion bedding, utility bedding, institutional bedding, our e-commerce business, our domestic business, our branded business. So we have almost 7 verticals now to work upon, where we are strategizing to see how each of this vertical can become a business of its own. And the way India is positioned with raw material, the way India is positioned on the supply chain side, onto the transparency and traceability in the world, we think and we believe that India should do well into supplying textiles, as we also see China Plus One strategy building up. So buyers and retailers are looking at a second source.
Okay.
Now,
Okay, all
the
right. Mr.
margin profile.
Lalpuria, yes.
Yeah.
Mr. Lalpuria, we'd like to apologize. We have to slip into a quick commercial break, but this conversation was very helpful and we did get a lot of clarity. But have to get into a commercial break, but we'll speak to you soon when your numbers are out. And as you specified, you'll be able to give us more clarity in terms of future growth prospects as well. We'll do one thing, we'll slip into a short break. When we come back, we'll put focus on life insurance data for the month of March. Stay tuned for that.